So why does Wall Street suddenly care about politics in Washington? We're joined now by Jeff Bush, strategist at the Washington Update. Welcome back, Jeff. Nice to see you again.
Nice to see you too, Sue.
Let me start, first of all, with the issue of trade. First of all, the president had some very tough words in his UN General Assembly address today to China. But secondly, as these proceedings, these impeachment proceedings continue, might it put the Chinese at an advantage? Do they wait out this whole process?
Well, I think that was the Chinese plan leading into that discussion as well. I think the president was using today's speech at the UN to level set that negotiation once again, to begin that process and building that relationship back up. But I think the Chinese were playing a little bit of slow ball to begin with.
What about fiscal policy? Does anything get done as Washington moves through this process?
Well, we're already seeing the movement towards a continuing resolution. I think it's very possible that we end up operating throughout fiscal year 2020 on a continuing resolution, which is disappointing. It means that spending stays the same and we can't begin new projects and new programs, which is, not good for our country. We should be able to move forward with those programs.
There's a lot of headline risk when any situation like this comes up. How vulnerable, we saw certainly a lot of volatility and reaction to every headline that came out today. But as this process continues, how vulnerable do you think the market is for headline risk?
Well, I think the market has been pricing in a lot more volatility. We've been speaking about it for about a year and a half, that we're building in these areas of uncertainty within the economy and within the markets. And this is just one more to that list. Today's announcement of the impeachment inquiry, it really doesn't fundamentally change where we were before we had this understanding of this Ukrainian situation. Jerry Nadler was already pursuing that direction along with the other committee heads as well.
But interestingly enough, we didn't see a lot of volatility. Perhaps it was simply the speaker putting forward the inquiry that made the difference to the Wall Street. But
that's correct.
The odds, though, of the president actually being removed from office are extremely low.
Very low.
Could this be a move, perhaps, by the Democrats to get the Senate back, which would change the dynamic in terms of legislation, fiscal policy, et cetera?
I actually would probably put forward the opposite opinion. And what I mean by that is it's very hard for the incumbent presidency to motivate the base in the second-term election. And if the Democrats pursue an impeachment proceeding, that's certainly going to fire up the Republican base. I would actually say that would lock in the Senate for the Republicans just based on that effort.
So how do you see this progressing? What might the fallout be for the economy and for the markets?
Well, not dissimilar to the impeachment inquiries and impeachment process that we went through with Bill Clinton. I think the market will initially react. We saw a little bit of that today. We'll probably see more here in the near term, certainly as new headlines hit. There's a lot of things that are going to unfold over the next week with the transcript coming out tomorrow, the testifying on Thursday. All those things represent that headline risk. But bottom line, I don't think there's fundamental difference at this point that the market needs to react to.
On that note, Jeff Bush with the Washington Update. Thank you again.
Thank you, Sue.